the banking expansion multiplier. Before looking at the calculation of the banking expansion multiplier, let's review how the banking system creates money in a more graphic way. There's a couple of assumptions of our little scenario. First, banks are required to keep a fixed percentage or portion of deposits in reserve. 2, banks make loans using the percentage or portion that's not held in reserve. And 3, individuals who receive the loans deposit the check into another bank for safekeeping while they are waiting to use the loan money. Joe deposits $400 into the bank, and the bank will divide this money up into excess reserves and required reserves. In this case, the bank keeps $100 and uses $300 for loans. The bank then loans out $300 to Fred. Fred deposits the money in the bank, and that bank splits it up into the required reserves and the excess reserves. That is to say, the bank is going to keep $100 in required reserves and now has excess reserves of $200, which it could then make loans from. Let's take a minute and see what happens to excess reserves and by extension loans when John deposits $400 into a bank. When John deposits $400 in the bank, $300 of excess reserves are created and also $300 worth of loans. The total excess reserves available to the bank is $300. These excess reserves become a loan to Fred. Fred takes his $300 loan and deposits it into the bank. The bank has now $200 in excess reserves. If the excess reserves from John's deposit are added to the excess loans created by Fred's deposit, a total of $500 worth of money is created so far from a $400 deposit. The bank loans $200 to help Dr. Yi start her clinic. Dr. Yi deposits the money into her bank, and her bank divides the money up into required reserves and excess reserves. Let's see what happens now to the amount of money created. So far from John's deposit of $400, $300 is created, so we add that to the total amount of reserves. From Fred's $200 deposit, $200 is created, giving us a total of $500 of excess reserves or loans. And from Dr. Yi's deposit, $100. So we add that to the $500 and we get a total of $600 in excess loans from a $400 deposit.